Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. We bring you the information, you do your own research. And today's guest is a keen enthusiast in the precious metals space and the founder and CEO of ARC Silver Gold Osmium. It's Ian Everard. Great to have you back on the show.
Thank you for having me on again, Jesse.
Yes, always appreciate hearing your perspective. And I want to start this time with the gold price once again reaching a new all-time high in nominal dollar terms, going over the $2,500 mark in US dollars. I want to note that while the Nikkei crashed significantly and the vast majority of the market corrected a few weeks ago, gold was one of the few assets that held its ground, aside from treasuries, long-dated treasuries. And now here we are, new all-time highs. What are your thoughts on gold's performance thus far, and how do you see the market evolving moving forward?
Sure. Yeah, I think I'm remembering back to our first interview, and I said gold has a long way to go to give an account for the currency debasement. Nothing has changed yet. It still has a long way to go to reflect all of these extra units of currency. I think the figure since 1980, we have 55 times more units of currency worldwide. So the 2,500, I think it's a psychological. I think markets take notice. It looks like even in these early days, it's forming a floor. We retested over the weekend, and we're back over 2,500 a day, Monday, the 19th of August. So the fun hasn't started yet for gold holders. Yes, it's encouraging, but this is just the beginning. I think we can get really excited when we see 3, 4, 5,000. I think that's when we can get really excited. Interestingly, gold is taking over as the world's reserve, not reserve currency, but the world's reserve. I fundamentally think we're going to get a split. We're not going to have a world reserve currency. We'll have a world currency, and then we'll have what is used by the majority of holders as a reserve. So we'll have a complete split because the two together form what money should be. Gold is a store of value. Currency is fungible, divisible, portable, universally acceptable, easy to pay in. So I think that's what's happening. I mean, obviously, Basel III declared gold as a tier one asset next to US debt. And I think in the next months, maybe a year or so, it could even replace the dollar as a reserve.
You also sent me a chart. I'm going to bring it up here. This is gold in British pounds. So let me bring this up here. Why did you want to look at gold in British pound terms? Is there something about it in the pound that's particularly significant?
I mean, the dollar took over a transition period from the pound as a world reserve currency. And so really looking at what gold has done or the pound has done in terms of gold gives us an insight into the future of what it's going to do with the dollar. The pound, the dollar, the fiat currency, i.e. it has value because the government says so. And not all else fundamentally. Yeah, I mean, yes, the US can back it up with weapons and war and destruction, but that only works for a certain time. So all fiat currencies will revert to zero. We just don't quite know when. So having a look at the pound, I mean, overall time, we're looking at, well, that's a factor of 132. So the pound has got less than 132nd of its value since 1970. And I think on the dollar, we're on a factor of around 71 in that time period. So this is what's coming for the dollar. So yeah, if you switch that to the US dollar, if you can. So still an exponential looking chart, but the dollar's only lost approximately half of its value compared to the pound. But both charts are showing an exponential graph. And at this point, we're either going to go onto the handle of the hockey stick and go vertical, or something else dramatic is going to happen. I can't perceive what else dramatically could happen apart from a mass human population extinction or a discovery of a quadrillion tons of gold somewhere that's easily instantaneously accessible. I don't think, well, I hope the first one isn't going to happen, the mass human extinction event. And I think it's very unlikely there's a massive hoard of gold that's going to be instantaneously available to the market. So we're heading for a compression of time. So basically, that's an exponential chart.
Very interesting thoughts there. I do want to talk about gold in the mainstream media because although it hasn't received too much attention, we've now seen some mainstream coverage. Fortune recently released an article titled "Wall Street Sees Gold Nearing 3,000 After Soaring More Than 20% This Year." By and large, the talking heads on CNBC, et cetera, that haven't spoken much about gold aside from maybe a mention here or there. There's actually some negative articles when gold broke out to the previous nominal all-time highs, where they were saying, oh, if you buy gold, it's kind of a bet on a doomsday scenario. So why would you want to do that? And they were kind of disparaging it. Getting a little respect here, so that's nice to see. When do you see, what will it take for gold to kind of get the credit that it deserves from the mainstream press? And once we get there, once the average person kind of wakes up to gold's intrinsic value, do you think maybe that'll be the time to get out, that'll be the time when prices really go high?
Whoa, a lot of points there. Let's focus on the latter one. You mentioned about the time to get out. Dangerous phrase. This time it's different. This time it is different. We have 55 times more fiat currency in the world than we did in 1980. Gold has not gone up 50 times since 1980. It's a fraction of that. Gold has gone up 4.2 times in dollar denominated terms. We haven't got, you divide the 55 by 4.2, you've got roughly 12. There is not 12 times more real wealth in the world than there was in 1980. These things measure out. So we're going to get human action will have an effect as people will run to get into something real, tangible, private, that they can hold, non-disclosable event purchasing it. As people realize, the closer and closer we get to a central bank currency trap where everything is coded, everything is recorded, and potentially actions are permitted or not permitted. I think as people realize, some people's perception will be this is a possibility. I believe it's a certainty. So that will cause a run to gold. But you mentioned, and I think these figures coming out of the main street, I think it's damage control. We've just recently had Jeffrey Christian of CPM Group saying he expects to see $50 silver, but it won't be able to maintain that price. And I'm thinking, let's be polite here because he is a respected individual in the industry. He's not taking account of mathematics, because to say that it can't hold $50, well, what if we've created another $10 trillion by then? We're creating 1 trillion every 96 days. So of course silver can hold $50 nominal. What if there's a rush to investment demand? What if there's a front running of industrial users to silver? There's so many reasons why silver could run and exceed 50 and hold that comfortably. So I think a lot of this leaking is damage control. And to me, that suggests that the real people in the know, that are pulling the strings, they know where this ends, where the fiat currency has zero value and real things are money. And gold and silver are the historic money, the current money, and the future money. They will be the store of wealth.
Yeah, that's great that you brought up silver because that was the next thing I wanted to talk about. Obviously, you see it potentially exceeding $50, maintaining that price at some point. There's been a lot of people who making forecasts, and obviously that doesn't always turn out great. People are getting a little bit disappointed with where silver is headed. I spoke to Andy Sheckman not too long ago on the show about silver, and he was saying one of the underappreciated aspects of silver is its use in wartime technology as well. You need a lot of it for Tomahawk missiles. You need it in all of the electronics that are used. And if we are going to see an acceleration of global conflict, obviously nobody wants to profit from these sorts of things. But do you see that being a potential demand on the industrial side? And just any other thoughts you have about where silver's at and where you see it headed?
Absolutely, the industrial use. I mean, the amount of equipment we're supplying to Ukraine. I mean, generally, it's older U.S. equipment that is due to time out or is timing out. So that will be replaced with more advanced equipment, more electronics, more silver. And this is part of the military industrial complex. So, yes, the military use, how you would ever find that out, maybe somebody could do the research, look at Lockheed Martin, Raytheon, Boeing, all of the big military contractors. Maybe somewhere in their accounts they state how much silver they purchase and use. But yes, that is a huge use. Not only is it a huge use, a lot of that is going to stay fixed in equipment, possibly for decades. And if that, whatever it is, the guidance system, the actual weapon, whatever the use of silver, it's trapped, if not practically destroyed. I mean, when a cruise missile goes off, I mean, yes, the silver isn't destroyed, but it becomes inaccessible. It's, vaporized. So absolutely, the military use it is going to be growing for sure.
And any other trends and themes you're watching right now when it comes to the silver market? Obviously, solar is another part of the story. Chen Lin, very bullish on that aspect of the silver market. And we're not seeing a lot of demand from the retail side in the West when it comes to silver bullion, at least from what I've heard recently. What are you seeing from your position as the owner of ARC SGO when it comes to silver bullion transactions? And your thoughts on the solar that side of things as well.
Sure. So solar first. I mean, India wants to be a major dominant player in solar. The US is becoming one. Um, Possibly one of the things that the Inflation Act that our current administration put into place might actually have a positive benefit is that the aim is to make the US an independent solar producer, the whole process. And I think there's a wisdom in that to secure that possibility. It could go horribly wrong with China very rapidly. I think it's going horribly wrong in China rapidly, so we could lose access to that supply. But yeah, solar, if you have the right location, it's very, very affordable energy that's independent of the oil cartels. So yeah, I mean, I don't know what the math is. I've heard there's 20, so about 20 grams, 2/3 of a troy ounce per solar panel. Once that's in a solar panel, that could be in that panel for 40 or 50 years. At the moment, they're not being practically recycled. So yes, that the solar use is going to trap a lot of silver. It's not going to be available for decades. Trends in the market. I mean, we're a relatively young company, 4 years. So we've seen the good times, the COVID times were good. Lots of stimulus checks, lots of PPI loans. People were spending it on silver. I just spoke to a close friend of mine in the industry. He's over 4 decades in the industry, and this is the worst it's seen. It is brutal. But basically, only real volumes are in the lowest premium product. So I think a lot of the big companies are stuck with current inventory they've bought, whether it's Eagles or Maples, whatever they are, and they can't shift it.
I want to shift to some insane policies being proposed in the United States. Kamala Harris has proposed an economic plan that harkens back to the good old Soviet Union, which is price controls on everything, rent, groceries. It's the greedy, it's that typical politician's line. We didn't create inflation. It's the greedy grocery store owners that are trying to take advantage of you. Um, I don't like politicians in general, so this isn't a knock on Harris in particular. I pretty much hate them all, but it's just this policy that we're living in an era where that could actually be acceptable, and there will be a certain amount of voters who are maybe undecided or who maybe weren't going to vote that could now go, oh, okay, well, why wouldn't I then? If I wasn't going to vote anyways, or if I don't care either way, I'm getting free stuff. And now she's posting on X that she's planning to give every new homeowner $25,000 towards their new home. Where does this money come from? This is a classic redistribution of wealth. It's getting either taken from everybody through inflation by creation of these dollars, or it's getting taken by taxing somebody else. It's really kind of crazy that we've gotten to this point. I'm wondering what your thoughts are, why you think this is all being done, and do you think it will work in terms of people buying into it?
Will people buy into it? Absolutely. I mean, that's politics. He or she who promises the most and people believe it will get elected. And I know we don't want to get political, and I'm quite encouraged what you said there. I think the safest position and the most logical position now is the double hater position. No recent US administration has been concerned with running a sensible budget. You should be building reserves up in the good times, and then if and then you balance it out. You might need a little bit to stabilize things in the bad times, just to smooth out the economic cycles. That should be the limit of government. So, I mean, the 8 trillion that was created from 2016 to 2020, we know who did that. That is causing the inflation now. We've got one candidate stating they will cut energy in half price, gas, gasoline, and electricity. Well, to cut that in half, oil would have to be about $20 a barrel. If oil is $20 a barrel, that means all US oil production will cease, because we cannot produce oil at $20 a barrel. That means pretty well all US gas production, which is a byproduct, will cease. Where does that gas go in the US? That gas goes to create electricity. So it is impossible to halve the price of gasoline and oil. And for somebody to do that, they're an idiot. And if you believe it, you're an idiot. So governments just say whatever they think will get elected. Now, whether this price controls, whether Kamala actually thinks it's a good idea, if she's a student of history and has studied any country where this happens, it always ends in a misallocation of labor, resources, energy. You get supply destruction, which eventually or pretty quickly will lead to the point where you get a massive jump in prices when it's failed. And okay, your rent may be held at $2,000, say, but no one is going to come online and bring it on another unit at $2,000. Ain't going to happen. So you get supply destruction, which will cause a rapid rise when this all falls apart. So that is just completely crazy. The $25,000 gift to somebody buying a house, other countries have done it. I think they did it in the UK. All it did, the developers add 25,000 to the price of their house. It's an instantaneous inflation or increase in the cost of a house. So yeah, these ideas are absolutely ridiculous. Government should just butt out. They should have fundamental responsibilities and not messing to this level.
Yeah, the problem is that people do want handouts. They do believe they're owed something and that the government should take care of them.
Yeah, and I mean, one thing I must note is it's not just the population. I mean, the banks and Wall Street are addicted to government handouts. They make reckless gambles. If they win, they keep their winnings. If they lose, they get bailed out. So they have the losses are socialized and the gains are privatized. So, and in a way, that's government interference. If the government allows that, that's government interference with the market. I mean, the market isn't always right, but it's probably about 98% more right when you back test it than government interference. I mean, there are times for government interference. I mean, you look at Britain, it was a Conservative government did the largest social housing building scheme ever undertaken. That actually did lower and made housing more affordable and housed lots of people in quality housing. But you need the wisdom of Solomon to do that and do that right. There's so many knock-on consequences. You might put very good home builders out of business because they can't compete with government subsidies. So the consequences are manifold and complex. So government intervention, very rarely does it end well.
Yeah, there's a whole book, Economics in One Lesson, that goes through all of the, basically it says every government program ever conceived to tinker with the economy always ends in failure through unintended consequences spilling over into other things.
And it's not it's
Yeah.
not always failure for everybody, but usually the only time it succeeds is making smart, hardworking, wealthy people wealthier
Yeah.
by distortion. I mean, we used to have in the UK your mortgage tax relief on your mortgage interest payments, and you could even use it on a second home and a third home and a fourth home. It's like that made people who saw this, wow, I don't have to pay tax on the money I earn to pay the mortgage to buy another house and another house.
Yeah, and that's when they come up with a wealth tax and say, look at those greedy rich people taking advantage. Now we need to get them.
Well, yes, and that is what's happened in the UK. Yeah, in the UK now they now changed the rules so private landlords can't claim the interest as a business expense, and so yes, they give with one hand and take away a bit more with the other hand.
I completely agree. I think everybody watching this show agrees with that. I want to talk about the broad market for a moment. As I mentioned at the start, when I talked about the Nikkei crash, we did see a brief correction that was fairly significant. In history, it wasn't that significant, but because the broad market's been ticking up, continuously making new all-time highs, this spooked a lot of people. I believe it was like a 3% correction, so not really a ton. However, a lot of people are pointing to the fact that the market is tremendously overvalued and in a bubble. So I want to read a quote here from hedge fund manager and financial author Mark Spitznagel, where he said, "It's not different this time, and anybody who says it is really isn't paying attention. The only difference is the magnitude of this bubble that's popping is bigger than we've ever seen." Would you agree with this sentiment? If that scenario unfolds, a massive bubble bursting when it comes to the broad market, obviously gold and silver will probably initially fall along with it in terms of their price, but will holding precious metals in this case provide any protection?
In my opinion, absolutely. And again, in my opinion, and many others, it will be the only way of privately storing wealth for the future, for future decisions, future needs. Everything else is recorded, coded forever. Crypto, Bitcoin, you name it, any other alternative things that people think, maybe fine art, but probably then you would have bought that through an auction house. There has to be chain of custody, proof of ownership. There's a record. You purchase gold and silver at the moment, zero reportable event, unless you use over $10,000 in cash. I think that loophole has been left because the people in the know are stacking up with gold and silver, and they would rather it was a very private event. So going back to the size of the bubble, I would say it already has crashed. In effect, that this wealth does not exist. It's digits on a server in a desert somewhere, using a lot of electricity and a lot of silver to maintain that data. This is musical chairs. The music is playing, everybody's running around, having a nice party. They think, if they understand the game of musical chairs, when the music stops, only one chair gets removed. This time, in my opinion, and a lot of other people's, when the music stops, there'll only be one or two chairs left. So if you've got perceived wealth stored as digits, presume it doesn't exist. Because it doesn't until you've bought goods, services, whatever, tangible assets. It does not exist until you've converted it into something real that you can eat, live in, rent, you name it, grow, farmland, forestry. And this is a problem. We have become so over-financialized. We've got financial services on top of financial services, layers and layers and layers. This is all fugazi. That famous word, I think that was used in The Big Short. Two definitions. One, I won't repeat the first one, but the second definition is fake. It's fairy dust. and it is fugazi. If your wealth is digits on a server somewhere or servers, do not count that will keep you in your retirement or send you on a holiday or buy a house, because when there is a rush to the exit, it's just not going to happen. Often the analogy of a fire in a theater with one door, very few people get out, or trying to put the Hoover Dam through a hose pipe. They just can't flow through. I mean, one good infographic is Exeter's Pyramid, where you have degrees of wealth getting more and more theoretical, more fugazi at the top. When this starts to collapse, it's not necessarily uniform, but you will get a rush, a run into more and more stable assets. And ultimately, at the end, the only thing that will count is gold. And then on the tip of that, silver, possibly some other tangible assets if you understand the market and you've got a good grasp of that, good control of that. But that's still open to taxation, foreclosure, all sorts of things government can do. So yes, I would say this bubble actually has burst because it's fairy dust. It just doesn't exist. When people realize that, that's when you get the physical burst.
And that leads to a broader question then that I've discussed recently with a few different guests on this show, in that in this era that we're in right now of kind of over the top government intervention, financial engineering behind the scenes, incredible levels of debt that only keep growing. We've seen some cracks in the banking system, with Signature Valley, Silicon Bank failures, and a lot of people think there's systemic issues in the bank system and that are going to come eventually to light and could potentially be catastrophic. Is it safe to have much money in a bank? Is it safe to own stocks in a brokerage account? Could these assets be seized? Obviously, there's that book by David Rogers Webb, The Great Taking, where he unfolds a scenario where the elites behind the scenes could literally take all assets, and that when you own an equity in a brokerage account, it's kind of more of, it's like having money in the bank. It's more of a kind of certificate. It's not a certificate of ownership. It's just kind of, this is owed to you, but you don't actually own it at that moment in time. What are your thoughts there? Would you be staying out of the stock market, keeping less cash in the bank, and kind of focusing on, obviously stacking gold and silver and maybe even physical cash and keeping it with you? What are your thoughts there?
Physical cash is, I think, getting dangerous in the fact that we are, in my opinion, going to go full CBDC. So there'll be a short window to transfer it into the new digital dollar. And it could well involve a lot of questions, whether that cash was legitimately earned. And even if it was, I don't think anybody wants a full IRS investigation. If you dump 50,000 into the bank because there's a 30-day deadline, because it will expire, tricky. We've seen that happen in India. I've seen it happen in the UK when they changed the design of the notes. There was a window to transfer them. People will ask questions: where's this come from? Why have you got it? So physical cash, tricky one. If you've got the space, maybe nickels would be good, because your nickel value is worth more than the nickel. So you're hedging there. You have a physical commodity that, if that becomes not non-US money anymore, it's still nickel and copper. So, but not practical for a lot of people to have a few 100 kilos of nickels. Now, what was your other question there?
Whether you thought it would be safe up ahead to keep money in the bank and to own equities through a broker.
Sure. So money in the bank access. We've seen it. In the last little flash crash we had. Several major, was it Fidelity, Schwab? People did not have access to their accounts, so they couldn't sell to lock in profits, and they couldn't buy to buy the dip. Whatever they wanted to do, they couldn't do it. What if that's extended over a longer period? Same with dollars in the bank. I mean, Friday, I logged on at 6 in the morning, couldn't access one of my accounts. That didn't come back on the line till 5 o'clock in the afternoon. At that point, it was too late to do wires, to send or receive ACHs. That was a lot more paperwork. I've got to ring clients, so this is going to be a day later than we thought. What if that turns into a 3-day event? You get roll-on repercussions, counterparty risks. What happens to somebody who's on leverage and they can't pay their add-in to cover their margin? Do they get closed out, even when they may have had the funds to pay it, but they couldn't do the transaction? This is a whole world. It's hard to conceive, and I obviously theoretically I've heard of people locked out of their bank accounts. Some banks, it went on for 2 weeks, I think, a couple of years ago. But just a day got me thinking, oh my gosh, do I need to open up more business accounts to cover? Do I need to find out which security system my bank is using? I mean, it was CrowdStrike a few weeks ago. I mean, that shut down hospitals, airports, and banks, So then what happens in their panic to get back online? Do they do everything thoroughly? Do they improve the system, or do they leave it even more vulnerable? They're just, we have got to get this working. They tell their developers, the software guy, this has got to be back on today. They're going to cut corners. Are they leaving more backdoors? So there is a risk that we're going to get an extended period where you can't do electronic transactions. And that could coincide then with a rollout into the CBDC. So therefore, any dollars that you can spend have to be converted into that CBDC. So now you're fully coded, fully traceable, and potentially permission can be granted or not granted for certain purchases. This sounds dystopian. This sounds impossible. This sounds like, oh my gosh, we got Second Amendment. We wouldn't let it happen. If they've decided it's going to happen, it's going to happen. When I say they, I mean the people that own the Federal Reserve, the people that own the banks. Most of them are hidden. We don't even know who they are. There's no transparency there, so we can't hold them to account. I mean, we've got the Fed meeting this week. I will drive past to work numerous black Suburbans herding around these so-called masters of the universe, in their posh hotel, deciding winners and losers, and I believe the bulk of them actually know what's coming and they're prepared. And I think gradually, the closer we get to it, that will leak out. We've got precedent of that. I think I mentioned before, speaking with you, the 2008 crisis. The Royal Bank of Scotland called up the Chancellor of the Exchequer and said, we're 40 minutes away from running out of cash, do something. But before that, those bankers contacted their close friends and family, said, go to the nearest ATM and take out all the cash you can. They were perceiving a situation where there was no more cash available. And in the US, what have we got left in the banking system? $500 billion, $1 trillion, probably, ballpark. That could go with social media. I wouldn't even get to an ATM from where I live in rural Idaho. I wouldn't even get a chance to. So even in a situation where there is a rush to cash, it doesn't exist in quantities required. It's a few $100s per American citizen. That's the physical cash. So physical cash isn't really a solution. Stocks, shares, anything digital, I think it's getting more and more precarious. One, because of the debasement. Two, because it doesn't really exist in tangible form. And three, because of the fragility of the actual electronic system. There is a scenario where the whole system could collapse and not be fixable. And then, okay, if you haven't got paper statements that somebody will believe, what happens then? Whose word do you take? It's you mentioned about share certificates. I think at best you're an unsecured creditor if your shares are held in a brokerage. So yeah, it's all very dodgy, to use a colloquial British word. I don't know if it translates into American, but the system is dodgy.
So some concerns to have for sure. I want to talk about osmium now, because that's another metal that you sell at Arc Silver Gold, osmium, and one that's not discussed a lot. We've talked about it a few times since I've had you on. I will share screen here with the price of osmium as we talk. This is the all-time. And maybe give us an update on the osmium market right now as it stands. It's a very interesting metal in that crystalline osmium is kind of a recent invention. It was created in 2013, I believe, is when the first crystalline osmium product started to be kind of come out to the market. Talk to us about how you see osmium currently positioned and the role that it plays. Can it play the same role as gold and silver in protecting and storing wealth as well? Is it more of an investment, something that you hope will go up in the future, somewhere in between? What are your thoughts?
Yes. So, yeah, that price chart there is interesting. Starts January 2017 at about $565. You've got the euro chart there, so multiply by add about 8% to that. We're now around $1,500 a gram. It's a fascinating material in the crystalline form. Osmium in the raw metallic form is fascinating as the rarest non-radioactive element in the known universe. Practically, different figures are being given. Maybe 20 tons, maybe 40 tons could theoretically be mined once we've finished mining the whole of the Earth that is accessible. Interesting development in the crystalline form is the rarest form of the rarest element. So you've got a multiplication in scarcity. The Osmium Institute, which is a private monopoly who takes the crystalline osmium from the Swiss manufacturer, which is another private monopoly. They have no competition. They've decided they're going to produce just over 1/3 of a ton. To put that into context, that is 2.5 size 7 basketballs in volume. That will be the total production, a 10-inch cube, 10 inch by 10 inch by 10 inch cube. That scarcity is hard to grasp. So can it replace it? It can't replace anything else as a tangible asset because there's so little of it. But for those who do hold it, it's going to do incredibly well as a store of wealth. It's many features. It's the densest element. It's in its densest form, in the crystalline form. It's incredibly beautiful. It's more abrasive than diamond, and it's a similar hardness. It's pretty well indestructible apart from crushing it or heating it to over 400 or 500 centigrade. No acid or alkali or combination of will attack it. So it's pretty well indestructible in its crystalline form, as well as I said, incredibly beautiful. So yes, I think it's an excellent diversification as a physical metal. Very few people will ever get to hold a piece, let alone see a piece, because of that production cap. 10 cubic inches, it is hard to conceive. 350 kilos.
Well, I am going to be actually producing an osmium documentary with the Osmium Institute, so people can definitely stay tuned to this channel to get some more background on the osmium market as well as the science behind it. As you mentioned, densest and rarest element known to man. Very cool. And I think maybe you could categorize it a little bit as fine art as well in that category, kind of a collectible because of its scarcity. So I think a very interesting asset for people to take a look at. I want to talk about platinum and palladium right now. I've spoken to some guests who actually in particular have been focusing in on platinum, given how undervalued it is compared to gold. What are your thoughts there? Obviously used in industrial purposes for catalytic converters. Some people have kind of discounted it because they think we're going to see a lot more EVs, but other people are pointing out that actually the EV revolution is not going to come out as fast and furious as people think it is, and we're going to need and some people also believe hybrids will be the ultimate winners of that whole scenario, and you still need a platinum for those catalytic converters as well. What are your thoughts on platinum? Maybe a little bit on palladium as well, if you have any thoughts there too.
I mean, sure. I mean, platinum, it's such a tiny production. I mean, South Africa is the largest producer, 2022, 140 tons. It's a tiny, tiny amount. I mean, obviously huge compared to the osmium. But the use cases, I think the use cases will eventually cause platinum to break out. I mean, just the hydrogen fuel cell. I mean, Japan is betting 100% on hydrogen. It's almost like they're going to skip the EV. They're rolling out across Japan, retail outlets for hydrogen. And it seems like all of the technology for storing and using that hydrogen, converting it to electricity, needs platinum. Catalytic, in the chemical refining industry, when you're cracking oil to get the petroleum products, platinum is needed extensively. Look at what's happening in the Russian Federation. I think as we speak, over 25% of their refineries need rebuilding. Huge instantaneous need for platinum, just for that. So yeah, you mentioned the catalyst. I mean, there's more and more medical uses are developing platinum in drugs and treatments, cancer treatments. And so just those use cases, platinum should be more expensive than gold. I mean, you look at the amount of gold. I don't know if I've got the figure here. I looked it up. The amount of gold mined in all time, it's crazy. 212,000 tons. And most of that is still above ground in physical form. 96% is still in bullion. So when you look how scarce platinum is and the potential jewelry demand, I know the Asian market, a lot of younger Asians prefer a white metal and they want a metal that is not their parents' metal, and platinum is a popular choice. But yeah, it's not broken out yet. We're still under $1,000. Its all-time dollar high was 2,700, I think. So it's got a factor of 2 to 3 just to catch up with gold, and that will be an environment when gold is moving. So will it do as well? I don't know. I think the downside is very low, and there potentially is a good upside. So as a small percentage of one's accumulation of metals, I think it's great. And I must admit, the few ounces we've had have cheered us up many a day when gold and silver have had the crap beaten out of them. Platinum is going up a little bit. It's like, it's nice to have one horse in the race day to day that is winning. So even on a psychological basis, I think it can be encouraging. And it's beautiful. I mean, the different coins, they're very, very low mintage. The US Mint hasn't done any business strike Platinum Eagles this year. They stopped doing fractional Eagles a while back. So is it more of a curiosity? I think so. We're gradually increasing our platinum holdings, but osmium and silver taking priority at the moment, personally.
Well, let's shift back to silver to end things, and I just wanted to get your perspective as a bullion dealer when it comes to people who are coming in to buy silver, whether it's coins, bars, etc. How do you differentiate rounds, coins, bars, junk silver? Where would you direct somebody who's maybe new to stacking as to which product would be best for them?
Okay, so a new stacker, I mean, the key things are timescale, how long you expect to hold the metal. That's key. One's personal expectations. I mean, we've got a lot of people who buy from us. They don't conceive of triple digit silver. They can't conceive of 300. And that's fair enough. I think mathematics proves it. Currency debasement proves it. So yeah. So your time scale is key. Preferences. Some people just want sovereign coins. But at the moment, the majority of the retail market is in getting the lowest premium silver possible. And again, now that would depend on your strength. I mean, I've got the offcut there of a Mexican 1,000-ounce bar. Well, that's just a little piece of it. That's pretty chunky. That's about 230 ounces. So that's a quarter. I mean, I can lift that, but 4 of those, that's getting hard to hold. A 70 pound. Not everybody wants those, but if you want to buy $1 million of silver, these are coming in at around 39 cents over spot. We can supply them less than you can pay Brinks to deliver a contract off the COMEX. So that's an anomaly at the moment. I mean, then you go down to the 100-ounce, bit more manageable. You're down to about 80, 90 cents premium on those. And then you jump to 10-ounce bar, 1-ounce rounds. those are they're generally called generic because they're not produced by a government. They haven't got a currency denomination on them. And then you go through the minted coins. So it really does depend on timescale as a key, preferences, and one's conviction, understanding of what financial times we're in. If people want to do it for a short term, I had a guy the other day, he wanted to put X thousand in on a short period and trade it. And I just said, look, the premium spread could kill you on that. And if you've got to pay for the shipping and insurance, if you haven't got a local dealer, that's not smart. So yeah, it's all about getting to know what your own understandings are is key in choosing the product. But at the moment, the premiums are pretty compressed down. They're fairly close. So as you go from the 1,000-ounce bar to the 100 to the 10 to the 1 ounce round, the premiums are fairly close. So it's a bit easier than it has been historically to make the decision, and you can choose on preference. I mean, some people are convinced we're heading for Mad Max and we're going to need to be bartering. They don't want anything bigger than a 1 ounce, round. Or here, let's give a plug for First Majestic or a beautiful 1 ounce First Majestic round. Aren't they beautiful?
Yeah, they
So
are
some
nice.
people want small, and I've just had a client. He cleared out a major wholesaler on Friday of dimes because he wants the smallest US constitutional piece of silver because he's convinced he's going to need to trade with them, and that's a good. It does cover you for that, and you're still getting silver at a low premium on the 90%. So 90% has been very, very popular. For that reason, it's got a multitude of possible ways of spending it in the future.
Great. Well, people can also reach out to you to get more of your take on gold, silver, osmium, platinum, all of that. Tell us about ARC, silver, gold, osmium. Give us some detail on what it is you do there, where people can find you.
Yeah, I mean, we were called ARC Silver initially. We're still registered as ARC Silver LLC. And then when we discovered the crystalline osmium, we changed our trading name to ARC Silver Gold Osmium. Because in my opinion, those are the ways you should be buying your precious metals in that order. I'm convinced a lot of people are buying gold when they should be buying silver, because you're not buying gold. You buy silver now, you've got an option that never expires, doesn't cost you anything extra on the purchase to turn it into more gold later. I mean, the ratio at the moment, we're in the mid-80s. I think within a few weeks, maybe 1-2 months, that will correct by 10%. And so just that move means you would get more gold, even after the premium spread. What about if the gold-silver ratio goes to 15-1, which it has been, and it was throughout most of monetary history? That's a factor of 4 or 5. So you could theoretically get four to 5 times the amount of gold by buying silver. So we like to help people consider what they're buying, why they're buying it. It's always easy for a business to try and sell what makes the business the most margin. We really endeavor not to do that. I like to sleep well at night. I like to know I've given the best information I have and passed it on to the client to help them make the best decision that will cover them for the eventualities that they see, that I see. And I want people to be thinking about their choices. But whatever, if you've been sitting on the fence, oh my gosh, I mean, Lynette Zhang has been saying this for years, just get it done. Because we will start stair-stepping up. I was talking this morning to a dealer, 41 years he's been in this industry, one of the most knowledgeable guys. He's saying his prediction for silver today is the downside is $1, the upside is $4. This is in the months there, not talking years. And I've spoken to him most weeks for two years, and he's never been this bullish on silver. Yet he's seeing in the retail business very, very little. But on the other side, there's very little sellback as well. So we had a little bit of flood when we hit the $32. So that did bring on some secondary market product that we were able to sell out at a big discount. But that's drying up rapidly. So that suggests to me what I'm seeing in the wholesale trade, that the inventories are tightening slowly. And I think part of that is some of this product's actually been recycled and has gone into industry. So it's exited the retail trade, which means there'll be less product available when human action kicks in. We've seen several surges, several rushes, retailers selling out, wholesalers unable to sell. I think that's coming again. We're going to see $1-2 rises in silver. And unfortunately, that will keep some people locked out because they'll be, well, I'll buy it when it's 28. I'll buy it when it's 29. And now it's 30, 31, 32. I'll buy it. And they will never make that psychological jump.
Well, this has been a fantastic conversation, Ian. I'm going to put a link to arcsgo.com in the description below, as well as right now on screen. I'll put your phone number and your email address where people can contact you directly and ask any questions they want. ARC Silver Gold Osmium has been a sponsor of the channel for several months. I think we're going on 6 months now, which is pretty amazing. And the comments I get about you are always that you, like you were saying, you don't push the customer to buy what's best for you. You make sure to understand their needs and you try to get them the best deal possible, the lowest premiums. And everybody I've talked to says that's the case and is very appreciative of that. So that's fantastic. Thank you once again for coming on the show and sharing your knowledge with the audience.
Thank you, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.